What is going on, traders? Welcome back to the Traveling Trader, probably the most requested video of the last couple of weeks. Oh, don't mind the olive oil right there. Actually, I'll just cover it with my shoulder. But how are we going to trade Tesla after the stock split? Now, the reason this is traded a lot, one, because Tesla is one of the most popular stocks, if not the most popular stock on the planet. And two, because it is a binary event. And usually there is a lot of action around binary events. And even if you were not a day trader, for those of you that hold Tesla stock, you may want to know how Tesla behaves after a stock split, especially if you're new to what a split is. This video is going to be all encompassing. You will see everything in the chapters below. I'm going to explain exactly what the split is, and then I'm going to go into how one could possibly trade Tesla after the split, whether they own it or they don't. There will be a trade in there for you. I guarantee it. You definitely want to stick around till the end. And you guys are probably asking because you know that we traded, the last split we traded was the Amazon split, and Amazon dropped 21% after the day of the split. The last time Tesla split in August 2020 seems like forever ago. Tesla dropped 33% in the following days. Apple dropped 25% in the following days after the split, and Google dropped almost 10% in the days following its split. So why does this happen? And you guys are probably catching on to a trend. What are we going to do about it? All of the trades and investment strategies I take will obviously be posted in real time in the Traveling Trader Academy. Just like the last time Amazon split and we bought puts in that, I will let you know what is the most lucrative trade, but I will give you all of the trade possibilities that I can think of in this video, so don't you worry. And if you want access to the Traveling Trader Academy, there are only a few spots left for August. Otherwise, they will be closed and likely open up in September. But check the link in the description. Make an appointment with one of our ambassadors. Not only do we send out trades like the ones that I was discussing, but we also have day trades. We obviously send out the day trade watch list each and every day. And we have day trades, active day trades as well, like this one that I sent out on the IWM, the 190 put. This one doubled in value eventually. And not only that, but you also get my trading recap. I recap the entire trade so that the entire group can learn from each other and learn what actually makes a good trade, how to enter, how to exit. And then obviously you get access to the Zoom calls with me as well. And then we share the recordings of the Zoom calls after the calls are done. We go over day trading strategies, option strategies, investment strategies, etc. It is a great value. Again, link is in the description if you are interested in applying. Would love to have you. But I just want to give you guys a brief overview as to what a stock split is and what is Tesla doing exactly with their stock split. What does their stock split entail? What are the details of that and what does it mean? Currently, as of the time of this recording, Tesla is trading at $8.92. Now, what they're doing is a 3-for-1 stock split. That means that for every share of Tesla, you get 3 shares of Tesla after the split. However, they're not 3 free shares. You will have to divide this 892 by 3. So if you had 1 share of Tesla at 892 after the stock split, which takes place on August 25th, you will have 3 shares of Tesla for 892 divided by 3, which is 297.33. Yes, I did the math in my head. No, I didn't. It's 297.33. So it is exactly the same value as what you had before, right? Whether it's 892, 1 share, 297.33, 3 shares, it's the same exact value. So why do companies do this? Well, companies do this because it makes the stock prices that are very expensive, it makes them more accessible to the average investor. A lot of investors cannot afford a stock price of $8.92, but they might be able to afford a stock price of $297.33. So the market cap doesn't change. And all that changes is the number of shares and the share value. Think of it exactly as if you have a $100 bill, $100 bill, right? Or you have 250s. This would be like a 2-for-1 split. Or you have 520s. This would be a 5-for-1 split. The end result is the same. It's still $100, right? It's just the denomination and the number of bills that change, but the exact value, the end value is the same. However, there is a psychological effect. Why do companies split? Again, to make their stock price more accessible to investors. Well, what happens when that happens? Usually, and with mega cap companies, and there have been multiple studies done on this, that a stock, especially mega cap companies, after the split, they always gain value after the split eventually. And there is a huge psychological game here between Tesla being priced at almost $900 and Tesla being priced at $297. If you are a new investor, this is perceivably cheaper, even though, again, it is the same market cap. The market cap of the company has not changed. So what that leads to usually is more buying eventually into the stock. Also, one thing that hardly anybody talks about is that now options are cheaper. So when you take a look at a Tesla options chain, one of the most expensive options on the market, because these are based on its current pricing pre-split, these options are very expensive. However, in a 3-for-1 split, this 900 is going to be 300. That's the strike price, right? Because you have to divide it by 3. And instead of $1,200, it's going to be $400 for this same exact strike price. So it makes options cheaper, which, as you guessed it, also increases the demand for options. Now, another benefit, and this is going to factor into our trade ideas, another benefit is that it actually makes covered calls cheaper and cash secured puts cheaper. So these are two different ways to make money from Tesla. One, if you have 100 shares of Tesla, you are making your money work for you. Don't worry, I will explain this because it is actually one of our trades, which is a covered call. And two, a cash secure put is if you're trying to invest in Tesla, but you want to name a lower price as opposed to pay the current price for Tesla, and you want to get paid for doing so. Yes, it seems too good to be true. That is called a cash secure put, another strategy that I will explain in this video. Again, check the chapters below. Don't be discouraged. There's something for everybody. All right, so what are we expecting Tesla to do? Well, if we are following the trend of every single mega cap, then what Tesla's going to do is likely, obviously nobody knows the future, but based on Apple, Amazon, Google, and the last time Tesla split, those are 4 of the biggest companies, might be the 4 biggest companies in the US, but when they split, we tend to see a drop off in price. Now, why does that happen? Well, a couple of reasons. One, because the smart money, right, the institutional investors are basically pumping this on the news of the split. They're buying because they know that people will actually buy as well. Retail investors will buy. And so they are helping to pump the price up before the split. But once a split happens, it becomes what we call a sell the news event. Newbie investors don't understand this concept enough. A sell the news event is when large money investors, usually institutions, dump their shares onto the masses, and then it leads to a rabid wave of selling where retail traders start dumping their shares as well, trying to dump on each other, driving the price down because the price ran up in large part due to the fact that the split was upcoming, right? People were buying. And then once a split actually happens, there aren't enough buyers left, and big money starts dumping their shares onto the FOMO buyers who bought the top right before the split happened. So trade number 1 is the riskiest. On the day of the split or the day after the split, you would simply buy puts near the money. And I wouldn't buy puts that have a very short-term expiry because you want to give yourself time to be right. And theta decay or time decay is the most violent leading up to the expiration date. Again, if you're in the academy, we talk about these concepts every single day and on the Zoom calls, so everyone is well informed of how options work. And if you have any questions, you can also ask in the beginner section where we have a whole host of coaches answering your questions. But I would likely buy the monthlies, the September 16 monthlies, near the money, right? So whatever the price is at the time, if it's above 900, I might buy the 900 puts. I might buy the 880 puts. It really depends on the liquidity at the time, and it depends on the price of Tesla at the time. But I will buy puts most likely expiring September 16th. And if we do get that drawdown, obviously nothing is guaranteed in the markets, then I will likely sell those puts after a large drawdown. Trade number 2 is selling a call spread. So if you don't want to spend a lot of money because these are very expensive options, what you could do is you could sell a call spread. So in this case, let's just say that Tesla is 900 and you expect that to be the peak. Well, you can actually sell the 905, 910 puts call spread on Tesla. So if we go in here, we go sell vertical. You are selling the 905, 910 put spread on Tesla, and the maximum collateral for this, because it's a $5 wide spread, is only $500. So you could sell that for around 230. It's jumping around right now, around $2.30, and your max loss is only 270 if Tesla expires above 910. So this is a very cheap way to quote unquote play the top on Tesla. If you expected to see a peak and drop after the split, you would sell the 905 call, you would buy the 910 call. This is called a credit call spread or a bear call spread. Now, the way that you calculate your max loss or max gain, if you were selling it for 230 and it's a $5 wide spread, then your max loss is $5 minus 230. This is the rule in vertical spreads, which means that your max loss is 270 if Tesla is above $910, which is your highest strike. Remember, we are selling the 905 and we are buying the 910. And if you don't know how to trade options, I would advise or suggest that you actually paper trade or don't trade real money until you actually understand what you're doing. But this is called a risk defined trade. Now, trade number 3 is actually if you have 100 shares of Tesla or you plan on buying 100 shares of Tesla the day of the split, because remember, it's going to be 3 times cheaper. If Tesla is trading at 900, the day of the split, it's going to be 300. So if you wanted to, you could buy 100 shares of Tesla, or if you have 100 shares of Tesla, you would sell what is called a covered call. Now, why would you sell a covered call? You're selling a covered call to protect your investment. So if you had 100 shares of Tesla and you expect Tesla to peak, you could sell a call, just a straight up call against your shares. And if Tesla doesn't go above that strike price, well, then you get to keep all of the money that you sold that call for. So let's say an example here. Let's say that you're expecting Tesla to cap out, not go above 950. You expect it to drop right after the split. Well, you could sell the 950 call for almost $25 or $2,500 because you have to multiply it by 100. And if Tesla doesn't go above 950, right? If Tesla doesn't go above 950, well, then you get to keep the $2,400 that you sold this call for. That's it. It expires worthless. You get to keep this money and your shares, and you gain some value from Tesla being stagnant or from Tesla dropping in price. You are making your shares work for you. However, if Tesla does go above 950, then you actually have to give up your shares, but you're still making a profit because you're not giving them up for 950. You're giving them up for 950 plus you sold the call for 24. So you have to factor that into your profitability. So you're giving your shares up for 974. Now, I know a lot of you are going to ask the logical question, what happens if you sell the 950 call on 100 shares of Tesla, right? 100 shares of Tesla, and then the split happens. What happens to this call? Well, everything gets divided by 3. Nothing changes. You don't gain or lose anything. So this 950 this call will actually be 316.67. And instead of having one call that is worth 950, you now will have 3 covered calls that are worth 316.67. And remember, instead of having 100 shares, you will have 300 shares. So everything divides equally, right? And lastly, the last thing I would do is sell a cash secure put. Now, for those of you that are part of the academy, know that we sold cash secure puts on Tesla. We've been selling them for years and have not been assigned once. I shit you not. The reason is because Tesla is a very expensive stock, and when volatility is high, these options premiums are high, and you can get paid an insane amount of money for selling a cash secure put. Now, let me describe what a cash secure put is, and then I will tell you how to actually do this. You can see here that we sold the cash secure put on Tesla and closed it out for 82%. This was like the $450 cash secure put, I think, which is crazy. Basically, you get to name your own price for Tesla, and I wanted to buy it at $450. Let me go ahead and explain what a cash secure put is. So in this case, let's just say that you go out to December. In today's prices, you could sell a 500 cash secure put on Tesla for around $1,000. Now, if Tesla doesn't hit $500, then you get to keep that $1,000. Yes, that is true. If Tesla does hit this $500 by December 16th, then you are obligated to buy 100 shares of Tesla, not at 500, but remember, you got paid $10 for the put. So this factors into your profitability. So you get to buy 100 shares of Tesla at 490. Now, who wouldn't do that in today's prices? So what I'm going to do is actually wait for Tesla to drop in price, if it does drop in price. And if we get, let's just say, a 10 to 20% drawdown on Tesla, then I will start looking at puts to sell. Now, you want to sell a put only at a price that you would buy 100 shares of that stock for. So if you're happy buying Tesla at $500, then you sell the 500 cash secure put. Some of you may be happy buying Tesla at 600. So you would sell the 600 cash secure put, and you can get paid $2,000 for this put. And if Tesla doesn't hit 600 by December 16th, you get to keep $2,000 and sell another put. Now remember, after the split, these prices have to be divided by 3. And then obviously there's good old dollar cost averaging. I know a lot of you in the comment section will be like, oh, just buy the stock. But yes, this is a trading channel and we look to maximize our profits and use as many tools as we have at our disposal in order to make money. Of course, you could just buy the stock. And if the stock does go down, you can start dollar cost averaging heavier as the stock goes down. But just know that, based on the analysis, every single stock split, mega cap stock split in the last couple of years have seen major drawdowns after the split. Now, whether that happens this time or not, nobody is a fortune teller, but based on trend, that is what you have to believe. Now, eventually, the stock will likely be more expensive than where it is today after the split. We're just talking about the events that happen, within the next couple of weeks after a split. Eventually, the stock is going to run back up because at the end of the day, it is trading at 3 times less than what it's trading at now, and it will attract more investors. Anyway, traders, that is it for this video. Hopefully, I gave you guys some value. Leave a big fat thumbs up if you did. Leave it in the comment section below. Let me know what strategies you are partaking in. I love to hear from you. I try to respond to each and every one of you. Again, there are only a few signups left for August. Otherwise, you will likely have to wait until September to see if spots are open. So click the link below and make an appointment with one of our ambassadors to apply for the Academy. You get access to the courses, the Zoom calls, the chats, the alerts, the analysis, the weekly reports, etc. There's so much in there. It is worth it. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.